Statistically speaking, 90% of millionaires made their millions utilizing real estate as an investment vehicle. And on today's video, we're going to talk about the ideal funding package for real estate investors in this changing times. So anyway, as I said, you hear that all the time. 90% of millionaires utilize real estate. They've made their millions using real estate. I'm not sure how true that is, but I really don't care. I thought it was a good opening to get your attention. So hope you're still with me on today's video. Like I said, we're going to talk about the ideal funding package. You know, if you're looking at starting to invest in real estate out here, you know, what is the best way to set yourself up to make sure that you're maximizing on your investment and getting the right financing in place as you're doing this as well, which is critically important. So a few things that I want to share with you, a few changes, a few insightful information here that you might find pretty dope, a few different strategies on how you can quickly jump into real estate as little as zero down. Okay, I know people hear that all the time, especially back in the day. You got them commercials on TV, Carlton Sheets, zero down real estate. I'm for real going to break it down on how you can get into real estate for 0% down, give you a few different avenues, a few different funding sources on how you can get into real estate with actually really 0% down. So anyway, let's go ahead. Without further ado, let's go ahead and get started. One of the really key things that I want to start off with actually first, before I go ahead and pull out my sheet, is some of the recent changes with Fannie May. If you're not familiar with who Fannie May is a government-sponsored agency. What the hell does that mean, Brian? What Fannie Mae does is, Fannie Mae is the bank to your bank, okay? So usually when you need to borrow money, you go to your local bank and you borrow money, you apply for a mortgage, and the bank gives you a mortgage. What Fannie Mae and other different government agencies come out there, they try to make sure that the bank can basically be able to continue lending mortgages. So how do they replenish the bank's money? If the bank only has $5 million lending mortgages, what Fannie Mae does is they come and buy some of those mortgages. So they're the bank to your bank. Now, in order for Fannie Mae to purchase these loans, they have to meet the Fannie Mae guidelines, okay? So that's why we're here talking about Fannie Mae and some of the changes that Fannie Mae has made and how these changes, these are dope, okay? Especially, like I said, given today's topic, how the ideal funding package for real estate investors, especially in these changing times. This is something that I definitely had to share with you. Is after I learned about it, I was like, wow, this is amazing. I got to share this with you. So anyway, Fannie Mae, let's talk about before and after and why this is amazing. And this is just dope with what's going on right now. Before Fannie Mae, you could utilize Fannie Mae, even FHA. FHA is kind of under a Fannie Mae umbrella. You could utilize FHA and Fannie Mae to buy your first time house. Usually you have to put like 3% down. You could also utilize Fannie Mae to purchase an investment property. But before, you had to put like 20 to 25% down. I mean, it was ridiculous. If you just really look at it from a standpoint of, if you're trying to buy a 4-unit apartment, a 4-unit complex or something like that, and it's worth $1 million, Fannie Mae required you to put 25% down in order for you to qualify for a Fannie Mae loan, which is $250,000. Not a lot of people had it. Okay, clearly that's just crazy. Now, what Fannie Mae just recently did, this is why I'm telling you I'm dropping jewels today. Fannie Mae increased their loan to value up to a 4-unit. As you can see right there on your screen, you can Google this up. You don't have to believe me. Go ahead and Google up Fannie Mae eligibility matrix and the requirements. Up to a 4-unit, you can purchase up to a 4-unit, and check this out, guys, up to 95% loan to value. What does this do? They've literally increased it by over 20%. So that means that $1 million property that you were trying to buy, now only you have to come up with $50,000 instead of $250,000. That's huge. A really big way for you to jump in and start investing in real estate. So, that and many other ways is what we're going to discuss today. And quickly, as we go deeper into this, so that's a huge change. So if you're trying to get into real estate, and that's up to a 4-unit, as you can see out there, all you would need is $50,000. Now, the other requirement that Fannie Mae wants you to do is you only have to live in the property for 1 year. Okay? So you can literally rent out the other 4 units, stay there for 1 year, meet the Fannie Mae requirement to rent out that unit, and continue on investing. It's really great. Okay. Some other things, the only other requirement that I think you need to know about is Fannie Mae does require that you have a 6-month reserve as far as the payments. 6 months of the payments has to be in a reserve, but they don't want necessarily cash. So if you have stocks, 401k, something that has a cash value that meets that reserve requirement, they're okay for you to use that. In addition to that, Fannie Mae allows you to use the future income of the property that you're going to be purchasing. Up to 75% of the rents can be used as your income to offset your debt to income ratio. Again, an amazing product for you to try to jump in and quickly get into real estate. So let's just quickly kind of cover this and summarize, the benefits of this program, and we'll kind of highlight some of the cons as well, because with the good, there's also bad. So number one, what are the benefits? Only 5% down for you to get into a multifamily real estate. It's never been that low ever. Okay, so this is huge for Fannie Mae, to jump this quickly into this. In addition to the benefit of only 5% down, you're gonna get the best interest rate. Because this is a Fannie Mae product, it's a government-sponsored loan, so the interest rate is just going to be the best. It's definitely going to be way better than any kind of DSCR loan when you're talking about investment property, because this is just Fannie Mae, it's a government-sponsored product. Now, what are some of the cons? So as I said, the low down payment, the fact that you get a much better, attractive loan. It is a 30-year fixed rate. Now, what are some of the cons that you kind of want to highlight with Fannie Mae? Number one, this is a full doc loan, so income verification is required. That is something that's pretty big. In addition to that, you will have to pay PMI. That stands for private mortgage insurance. If your loan compared to the value of the property is higher than 80%. If you get that below 80%, you do not have to pay private mortgage insurance. So that's something that you want to keep in mind. Those are pretty much the only cons as it pertains to this specific product. Now, another thing that I wanted to point out there, especially when we're here talking about the quickest and the best ways, the best real estate funding package as you get into real estate, the ideal funding package for real estate investment in 2024 is I gotta talk about VA loans. I think this is one of the least talked about tactics on how to quickly get into real estate, and it's probably the best way on how to get into real estate, because now we're not even talking about just 5% down, we're talking about 100% financing, up to 103% financing. We're talking about VA loans, and VA loans are completely different than Fannie Mae for a few different reasons that we're going to cover today. So just first off, I'm going to discuss some of the different changes that has happened also in VA that make them even more attractive than even the Fannie Mae product. Now, number one is, of course, with VA loans, you truly can get down. You don't have to worry about the 5% that you have to make with the Fannie Mae. With VA, it's 0% down. As a matter of fact, VA will even cover your closing costs. I believe VA goes up to 103% financing. And that specific product, a lot of people just assume is for owner-occupied single-family residents. Absolutely not. You can purchase a 4-unit investment property with a VA loan. Now, again, the only requirement is you have to live there for a year. With FHA, they're very strict on that requirement. With VA, they're not that strict on that requirement, given how veterans have to be very flexible. Most veterans move pretty much, every 5 years or every 4 years. So VA, as long as you have an explanation why you have to move, they are very flexible with that requirement. VA is also very flexible with their reserve requirements as well. They do require that you have at least 6 months in reserves at closing, but they're also very flexible with that as well. So VA loan is even more attractive than the Fannie Mae loan. In addition to everything that I just mentioned, with the VA loan, you do not have to pay PMI. PMI stands for private mortgage insurance. This is huge. This is literally savings that you have, and not just savings, but it increases your purchasing power. Did you know that a $500 monthly obligation is roughly equivalent to about $100,000 in available mortgage purchase power? So just kind of keep that in mind. If you have $200 or $300 that you have to pay with, in private mortgage insurance, that means you're losing that much, maybe $50,000 to $75,000 in purchasing power that you could have. So VA is even more better. So if you're a veteran out there and you're not taking advantage of this VA loan, come on, this is just insane. And the beautiful thing about it, this is the trick here, okay? You have access to this VA loan. You cannot only just do it one time. You can only use it for one property at a time. But think about it like this. If you're a veteran and you purchase a property, you keep it for a couple of years, and you refinance that property out of that VA loan, and you get like a conventional loan, some other type of loan, then you have an opportunity to go ahead and utilize that VA loan again for another property and do again 103% financing. You see what I'm talking about? This is just amazing. Now, you combine this with maybe something like credit card stacking, where you can now not just especially when you're talking about the Fannie Mae product, which requires you to still put 5% down. If you combine that with credit card stacking, where you can utilize some of those funds to cover the closing costs. Fannie Mae will not allow you to use borrowed funds to use for down payment, but you can use the borrowed funds for closing costs, to pay for the appraisal, to pay for the inspections, and things like that. All this hidden charges that you have to face when you're talking about getting into real estate. The title fees, the closing fees, or whatever it is. We're dealing in the market right now that it's not. A couple of years ago, buyers were willing to pay most of this closing costs, but right now it is kind of a very tough market when it comes to real estate. So having any kind of extra edge is just definitely a benefit. But anyway, I just wanted to highlight those two videos for you. So if you ever are considering trying to get into real estate, these is amazing. In addition to this, because we here live in the business world. So most of the loans that I offer, we don't do Fannie Mae loans because these are owner occupied. You have to live in that property for a certain period of time. But I have to bring that out because we're talking about investments, and this is just an excellent way for you to actually get into investment. So we've actually partnered up with somebody that does this in every single state. So if you're looking to get into a VA loan, if you're looking to get into Fannie Mae products, we can refer you to somebody, but we don't do any owner occupied residential properties. What we do is non-occupied residential properties. So if you purchase with VA, if you purchase with Fannie Mae, you're not trying to refinance into something, refinance out of it and put it under your business name or something like that. That is something that I can help you with. But I do want to highlight as well, in the business world as well, in the investment property world, things are changing. We did within the last couple of weeks, interest rates have started going down. And there is a high probability in 2025, as we're rolling into the new year, interest rates will go down for sure in 2025. So we have a market here where, people are kind of at a standstill. Prices did not go down as expected because real estate is still at a all-time high in so many different markets. Some markets have slightly adjusted to something much lower, but interest rates are still very high. We're getting into a position where if 2025 interest rates start going down, you're going to have a lot of people going after some of these properties, and property prices are going to continue to increase as well. So if you're looking to get into the market, this is the right time to position yourself to really evaluate if you have the right ammunition, the right funding package. As I say, this is the ideal funding package I just discussed today, with a combination of VA, Fannie Mae, and our DSCR services. And also we do have a fix and flip program as well. If you're not part of our email list, you definitely want to get into our email list. I sent this email a couple of weeks ago. I think this was 4 days ago, that we can do up to 90% loan to cost on fix and flips. That's huge. 90% up to loan to cost on the fix and flips. And I have lenders that will cover 100% of the rehab. I mean, just think about that. All right, 100% of the rehab will be covered, not to exceed 80% of the after repair value. Okay, so again, this is just amazing. If you're getting a good deal out there, this is the time to tap into some of these great financing terms. As far as real estate financing, the volume has gone down because people are just not buying and selling the way they used to. People are kind of stuck. Nobody wants to sell, because if they sell, they have to buy in this market where interest rates are still high. And nobody wants to buy because, again, nobody wants to buy in this market where interest rates and prices are still high. So, the buyers and sellers are kind of just confused right now. Everything is almost at a standstill. Of course, there's still transactions going on, but not as expected. Not if you compare it with previous years during this time. So I say that to let you know that, number one, we can see what the lenders are doing. They're starting to incentivize people. When you see Fannie Mae increase their loan to value and knock off 20%, that was a requirement. They're trying to incentivize people to get into this game, to go ahead and start investing into real estate. When you see even private lenders increasing the loan to value and willing to cover up to 90% loan to cost, the only thing that is missing now is the Fed to come in and support the market with lowering the interest rate. And then boom, you're going to have something that is just going to be crazy. So anyway, I wanted to make that quick short video to kind of just highlight, number one, the huge change with Fannie Mae that allows borrowers to come in up to a 4-unit duplex, a 4-unit investment property. 2 to 4 unit, you can purchase 1 unit, but 2 to 4 unit, 1 unit, you only need 3% down with Fannie Mae. That's the FHA product. But up to a 4 unit and only require 5% down. That is amazing. And then of course we talked about VA even being better. VA, you can get your cake and eat it too. That's what we call the VA loan, because now you can get 103% financing. You can reuse it, purchase a property, increase the value of that property, refinance that property out of that current loan, out of that VA loan, boom, do it again and do it again and do it again. Again, an amazing way for you to actually build wealth in real estate and actually, just change your circumstances. So I hope you liked this powerful video to kind of just share some of these changes. Google up some of this stuff if you need it. My matrix is going to be available for you down below. I really appreciate it. If you've not joined our school program, you should definitely think about doing so. And by the way, we have a mini course on the 3 paths of lending if you're interested for $27. Link in the description where you can take a mini course and understand the 3 paths of lending and my theory behind all these lending products and how they fall into 3 different pots. But anyway, that is my time for today. Salute, and I'll see you in the next one. Anyway, if you stay with me through the end, I appreciate you. I really do. Please go ahead and give me a like to the video, subscribe to the channel. And I guess I should go ahead and pay some bills. Let you know what this video is brought to you by our sponsor, Broker Solutions Academy. There's going to be a link in the description. We work with people that are interested in becoming a business loan broker. We have a very comprehensive business loan broker course, and we're going to be teaching you everything you need to know about how to become a business loan broker. Our mission statement is we help business loan brokers understand and simplify the various funding solutions that are available in the marketplace so you can properly serve your clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a referral partner. This video is also brought to you by Pennington Consulting Group, and that's where we work directly with entrepreneurs and also business owners to help them get funded. So if you're looking to start, grow, or even expand your current business, Pennington Consulting Group, there's going to be a link in the description where you can go ahead and schedule a time. And like we always say at Pennington Consulting Group, our goal is to help you reach your goal. Again, thank you for joining me today, and I'll see you in the next video.